As you're moving forward through the buyer closing process and your due diligence period with your trusted real estate advisor, you also want to schedule a time to meet up with your loan officer to review your loan estimate and your buyer closing cost worksheet. Right now, I'm on my way over to Bill Merren's office with New American Funding, and we're going to meet the Hernandez family to gain clarity on their closing cost and their loan estimate. For reference, when you're buying a house, generally buyer closing costs will range between 2% to 4% of the price of the home. So let's use an easy example here. If we're talking about a $300,000 house that you were going to purchase, buyer closing costs would amount to 2% to 4% of that price, and that's on top of your down payment depending on if you have a down payment to be made. In the case of Adrian Nacole, he's using his VA home loan, so there's no down payment with that. In the case of the buyer closing costs, going back to our example, if the buyer closing costs were 2% of $300,000, then you know that's $6,000. And if the buyer closing costs were 4% of the sales price of a home, using that same example from $300,000, then we know it would be $12,000. This is really important to note as you make plans to buy your new home and as you move forward through the closing process. Ideally, we would have got all your ducks in a row and ready to go well before going into home shopping mode. So when it comes to buyer closing costs, just keep in mind they generally range 2% to 4% across the United States for financed offers on a house. It really depends on if you're in an attorney state or a non-attorney state, meaning that an attorney is or is not required to be part of the real estate transaction. In attorney states, it's going to cost a little bit more than the non-attorney states, so keep it in mind to go with a rule of 3 here and always plan on having an average of 3% for your buyer closing costs ready to go. If you have any questions about anything, simply hit us up in the comments and we'll get your questions answered. And for now, let's go join Adrian Nacole and Bill. Buying your first home is a momentous occasion many of us have dreamed about for as long as we can remember. Meet first-time homebuyers Adrian, Nacole, and their family of 4 as they move forward buying their first family home.
We want to have space where we can run and stretch our feet and spread our wings and fly.
You'll be with them every step of the way from their home buying game plan meeting.
What makes you happy and excited when you visualize your home?
All the way to their closing day.
He's somewhere up there, proud of me, proud of him.
Watch their story unfold on Real Estate, the Untold Stories.
Adrian, Nacole, it's
Hi.
great to see you. Girls, what do you have? Maybe I need to get one of those. I like that lollipop. It turns into an animal. Is that Simba? I know, right? You gotta get it, Flight jacket.
Hi, how are you?
Good, good. So just out of curiosity, we're getting ready to go review your loan estimate. What are you thinking? What you feeling?
Let's close this baby.
We're just began the process, my friends. we gotta go over so many different steps, and it's a good point that we'll be closing it soon enough. But regarding like your loan estimate, your closing costs, are there anything that sticks out in your mind?
Yeah.
That's not hit her in the head, by the way. So everything is going along really smooth. Ladies first, gentlemen next.
Hey guys.
Hi, how are you?
Nacole, good to see you again.
Hello.
How's it going, man? Good to see you.
Good to see you guys.
Hi girls. High five. All right, another one. All right, Mr. Finney.
Mr. Merren, good to see you.
Go ahead and come on back, guys.
I just realized something. Complete side note, Nacole. I get the Nacole Rose now. I'd never seen it before. I get the Nacole Rose right there.
I haven't got my rose yet, but yeah.
What kind of flower is that? It's a good flower.
Plumerian.
I just never noticed it before. I never seen her foot. I never saw it
It
before.
was a cover-up for a stupid 18-year-old tattoo.
She was in a gang. She was in a gang.
Were you really?
I'm just kidding.
I was like, I couldn't see her in a game, but
Well, I live by Pico Rivera, but no, I'm just kidding. No.
the dancing club, right?
Okay.
You told me you guys met in the dancing club, right?
Yeah, Adrian, yeah.
All right.
How to parade and everything. Ballet and everything.
Hip-hop.
Sashay. No.
I knew there was something different, man. I knew there was something different.
Anyway, I know complete random, but it was like, hey,
Yeah,
every life has a story, and
I still
tattoos have
I
one.
still want a rose. Yeah, these are my young, dumb ones.
After you buy the house, then get the rose, and then put the house to the side.
Exactly.
So congratulations, guys, on getting that offer accepted. That's exciting stuff. So now we got to talk about the fun part. So obviously we sent you guys the closing disclosures. So you guys got that in the email, right?
Right, real quick, got it.
Yep, we got it. And then we talked about all the different fees and kind of what everything was and kind of explain what they were. Did you have any questions about that at all on the closing disclosure?
No, it's kind of like it's broken down into what it kind of everything is.
Okay.
I don't think, yeah.
Okay. And it doesn't change too much, but so the loan disclosures that got sent out after that is kind of what we're going to talk about today. One of the things that was in there is called a loan estimate, because that actually breaks everything down for you. It breaks down the loan amount, the monthly payment, the cash to close, and it shows you kind of what everything is. And then I actually have the closing disclosure here as well. So if you guys have questions or something doesn't make sense, we can kind of reference back to that, what we originally spoke about. The loan estimate is actually a very important piece to this puzzle. The loan estimate is something that you're actually going to get when you're a little bit farther along in the process, once you've actually already gotten an offer accepted and you open up escrow. The thing that you get before that is called your closing cost worksheet, which I know you've probably already seen. But the loan estimate is going to break down all of the very important numbers for you. It's going to show you what your interest rate is estimated to be if it's not locked yet. It's going to tell you if it's locked or if it's not. It's going to break down all the components of your mortgage payment. It's going to show you your principal and interest. It's going to show your property taxes, your PMI if you have any, your home hazard insurance, HOAs, anything like that that's associated with the purchase of your home is going to show on the loan estimate, as well as what actually comprises the closing costs. So all of the closing costs is going to be broken down on there line for line. It's going to show you what each one of them is for with a dollar amount next to it. Now guys, a big thing to kind of keep in mind when it comes to this loan estimate is if there's something you're not understanding, just make sure just to pick up the phone, reach out to your loan officer, and I'm sure it just might be a little bit of confusion there, but mistakes do happen, so don't get too emotionally concerned about that. Just pick up the phone, give a call, and I'm sure there's a reasonable explanation for it, just to make sure you don't have any additional questions and that all your questions are answered. So again, guys, super important to read it front to back. Make sure you understand everything on that loan estimate. Loan estimate's really simple stuff. But basically up here, it's going to go over the basic information of the loan, right? So you got your loan amount up here. You have your interest rate. And we have not locked the interest rate yet, but that is where the rates are at today. Your principal and interest, which is basically just like we talked about, that's just the mortgage, right? So that covers just what the mortgage payment is for the mortgage. Principal and interest does not include all the other taxes, the property taxes, the insurance, the home hazard insurance, all of that, okay? So that's your principal and interest. Down here, it basically tells you do not have a prepayment penalty, meaning you guys can sell, you can refinance whenever you guys desire to, right? So if you want to, refinance the property, if you want to sell it and move, maybe get a different house, you guys can always do that. Balloon payment, there's no balloon payment. It's a 30-year fixed loan, so that means the rate is fixed for 30 years. Everything stays the same, okay? Does that make sense?
Yes.
Okay, so down here, this breaks down kind of the total payment, which includes everything. So you've got your principal and interest like we just talked about, which is up here. Mortgage insurance, there's no mortgage insurance because you're doing a VA loan. One of the benefits of using your VA loan is there's no PMI, okay? And then down here we have your estimated escrow. So what that is that's going to include your property taxes for this particular house and your home hazard insurance, right, that we previously talked about. So that comes out to $287. So if there is a change that you guys want to make to your insurance, just let us know within the next couple of days so we can get that all dialed in. But that's pretty much where we're at with that. And you just add those together and you're looking at that total payment, which includes everything, okay? So down here, breaks down the closing costs. So down here, it shows that there's $13,000 in closing costs. That's a portion of the closing cost is your lender, title, and escrow fees, but also your prorations, which is the things you guys would be paying anyways, even if you paid cash for the house, which is your property taxes, your insurance, and all that. Okay, your total estimated cash to close is $8,000 and some change. Okay, now that does not include your earnest deposit, right? So if you've made, say, you made a $5,000 earnest deposit, that $5,000 will be applied towards the total dollar amount to close. Okay, does that make sense?
Mm-hmm.
Cool. So pretty simple stuff on the first page there. And then this next page, this just breaks down everything that was essentially on the closing disclosure. So it pretty much shows you all the stuff here, which makes these numbers on this first page. Okay, now this is the only thing that you guys are going to pay for up front, kind of outside of escrow, which is going to be the cost of the appraisal. Okay, so, and the reason is because typically the appraisers won't go out and actually do the appraisal until they're paid most of the time.
Quick question. How would you prefer to review your loan estimate and buyer closing cost worksheet? Would you like to review it in person? Would you like to review it over the phone? Or perhaps a video call? Tell us in the comments below.
So when you guys get anything that's emailed and somebody's asking for payment, pick up the phone and call me. You know, you want to make sure that it is actually what you're doing is you're paying the correct people. You don't want to just give anybody your information.
Right.
Because you're going to have to give them your debit card and all that kind of stuff.
So even if you have any questions, right,
Yep.
just any, it's better safe than sorry. Call me, call Bill, whatever you
Yep.
need to do, and don't make any payment until you have the conversation to validate. It is really important because cyber hackers are getting like very crazy and industrious.
Yep.
And they're now going after like 401k accounts too. So I mean, it's
Yep.
it's spreading. So it's better safe than sorry, especially when you're in here, because they're finding that It's not so much about hacking his system or hacking my system. It's about hacking your email.
Yep.
And once they're in your email, if they get you to click, they get you to download something, that's where the danger comes. So anytime you have a question, just pick up the phone and call, send a text. It's the easiest way to protect your money and protect your family.
Yeah, and not only that, guys, when it comes to paying for things, wiring money for closing, you're paying for an appraisal, don't just do it if you think something's wrong. Before you give anybody information for making payment or transfer money, call me. Call me, call my team, call one of our assistants to make sure that it's the correct information you're putting out there so it's paid for so you can get it back. Okay? All right, so that's that there. This year, the $150 for the appraisal reinspection fee, this happens sometimes. What that is for is if you're working with a professional realtor, somebody who's full-time and knows what they're doing, so it doesn't come up as much, right? So sometimes the appraiser could have to go back out for something that maybe the realtor missed, and if the appraiser goes back out, they have to be compensated. So that's what that 150 is. So when it comes time to close, this 150 is actually going to be removed and taken out of the closing costs.
A common thing that we would see that is if somebody went in the contract, the appraiser went out, and here in Las Vegas, Nevada, we have to have what are called seismic straps, essentially earthquake straps around the water heater. Well, if they're not on there, the appraiser has to condition the appraisal. So even if the value checks out and everything is good, he's got to say, hey, I got to go back out and clear the condition because they didn't have the earthquake strap. So please let me know. So that's where that $150 would come in. So as we did your home tour, these are the things that I'm looking at so to make sure that I can relay this to Bill.
Yeah.
Hey, we need to get this done. Then I call the listing agent if something's amiss, just to make sure we don't have that issue so we can save that $150.
All right, guys, so this is something that's very important to understand. It's going to be the appraisal process and what an appraisal is, when it should be ordered, what it looks like, what can happen during the appraisal. So the appraisal process is pretty simple. It's really out of my control, it's out of your control once it's actually ordered. But it is very important to understand and make sure that your appraisal is ordered. And when is it supposed to be ordered? If you're buying a property that's a resale, it's not new construction. It's a property that you're going to close in 30 to 45 days, 60 days, whatever that is. It's already built. That appraisal should be ordered within a couple of days of your loan being disclosed. So what that means is once you sign your loan disclosures, once you talk to your loan officer about your closing costs and your payment and all that, hopefully you're locking in your interest rate. At that time, you should talk about ordering the appraisal, right? So within a couple of days from signing those disclosures, that appraisal should get ordered. Once it's ordered, it goes to a third party called an appraisal management company. That appraisal management company is that third party between myself as a lender, you as a buyer, Andrew as a realtor, and then the appraiser. So we can't communicate and ask them to make any changes on that appraisal. Once that appraisal is ordered, if it's a conventional or a FHA loan, just a standard conventional FHA loan, typically it's going to come back within about a week. So kind of some things to think about is if it's been a couple of weeks, you don't have that appraisal back yet, those are red flags starting to go off, right? It's been a few weeks, you definitely want to reach out to your loan officer and see what's up, because maybe they ordered it, but maybe the seller isn't getting back to them. Maybe there's no lockbox on the house. There could be all kinds of different things of why that appraisal has not come back. So again, FHA conventional should be back within a week or so. VA is a little bit different. So the VA has a different VA process, right? It does not go through an AMC, it goes through a VA system that they use. And that VA appraiser has 10 days from the date that it is ordered to get the appraisal back. So again, it takes a little bit longer, but same thing as with the FHA or conventional. If it's been a few weeks, you haven't got it back yet, you haven't gotten any updates, definitely reach out to your loan officer, your lender, maybe even your realtor, and find out what the heck is going on. So again, during that appraisal process, not too much that you can do, except just sit back and kind of wait and see what it comes back at. Now, once the appraisal does come back, if the appraisal comes back a little bit low, there is things that you can do, and just go to your realtor and just let your realtor use their knowledge, use their experience to handle that situation, whatever it may be. Now, if the appraisal comes in high, which is great, it happens, especially when you have a really good realtor and they know what they're doing, that appraisal comes in high, good for you. Don't tell anybody. You don't want to put it on email, you don't want anybody to know. That's good for you, good for your agent, good pat on his back for doing a good job. But that's just a great situation for you as the buyer. So again, guys, appraisal, nothing to be scared about. It is a little bit out of your control, my control, but we just sit back and wait. Once it comes in, then we handle business and get things taken care of. So if you got any questions about that, or you're kind of wondering a little bit more, just make sure you just reach out and get further clarification from your loan officer or your realtor. So then this next piece down here, this is basically just all of your title and escrow fees, okay? It just breaks everything down, talks about what each one of these different things are for. And these are just things that are associated with your loan no matter what mortgage company you went through. This is actually from the escrow company that we've actually opened up escrow with. And the escrow company is that company you guys wired the money to open up escrow. Okay. Okay, so that's what that is. And then up here you've got your recording fees, $150. That's actually to record the property into your name once we close escrow. So then you guys can become the new owners, right? So that's what that is. The transfer taxes, typically the buyer and the seller a lot of times will split that. Somebody will pay some, somebody will not pay some, but that's what that is right there. Down here, so your prepaids, this next section. So this is something that's a little bit different to understand. Is basically what you're doing is you're prepaying some of your expenses for your mortgage. So you're prepaying your home hazard insurance. You're prepaying some of your property taxes, because what we do out of the escrow account is once these different items become due a year from now, a few months from now, we pay them when they're due. So your homeowner's insurance is a 12-month deal, right? It's due once a year. So what we do is we collect a year of your homeowner's insurance premium up front through closing, so you pay for a year, and then we also take whatever that annual premium is, divided by 12, and that's what your monthly payment goes into. So a year from now, 12 months from now, when it becomes due, we pay it. Okay, same thing with the property taxes. Property taxes are due every quarter. So when we get closer to closing, escrow will let us know exactly what's being collected. Then we'll make sure that's dialed in, so we're collecting the correct amount of property taxes. That right there can change a little bit. If you guys end up talking to a different insurance company and you guys get a different quote, maybe it's somebody else you want to use, no problem at all. Totally up to you guys on what you want to do there.
The other cool thing, Bill, is that here in Clark County, because you are a Marine Corps veteran,
Yep.
you can actually, when you close, go over to the county assessor's office, take in your deed of trust. They might ask for your DD 214. You can go over there and request a property tax exemption. Up to a certain percent they'll give to you, and you can use it for either your car registration and or your property tax. So if you're looking to lower the amount of the property tax due, once that's set up, then you'll see that reflected on your mortgage, but it's always like a year in advance. So the fiscal year here in Clark County is every July. So long as you register as early as possible once you close, because we're going to be closing around the time frame before July, just go ahead and get that done. I can shoot you the link if it's easier for you that way, but it'll save you hundreds of dollars over the course of the year. What I opted to do with mine is just to instruct the mortgage service provider, Bill's company, to say, hey, could you just take those payments the county is making for my property taxes and apply it to my principal balance. So even without putting in extra money, which I already do to pay off my mortgage faster,
That's good.
just by using the benefits afforded to you because of your service, which in my humble opinion as a veteran, you served your country honorably and bravely. You deserve it. Bill served his country. I served the country, right? These are things that Clark County appreciates and recognizes. But by virtue of knowing about that program, you can literally shave, just with that going towards your principal, at least 3 to 4 years off of a 30-year fixed rate mortgage on the amortization schedule without ever putting extra money into it. Now, obviously, you and I will be talking about how to pay your mortgage off faster. But we're trying to save you and your family money in the long road.
100%.
But take advantage of it. It's one of the smart things, and it's something that every veteran or active duty that Bill and I work with, we're always, hey, make sure you get this done. It's easy to forget about, but the impact is real.
It's a big deal. Not a lot of people remember. Like, we tell them, and they don't remember. So what Andrew's talking about, he's got real world experience with doing it himself. And then don't they have to go down every year and do that? Like before?
It's a good question. So you don't have to keep going down in person. I like to do it to make sure I don't mess anything up personally. But they'll send you a postcard for the next fiscal year. And when they send you the postcard, then you go ahead and enter the information. I normally like to find out how much my amount's going to be and how much it's going to offset the property tax, and see if it's better to say, hey, I need to use this amount for my car registration, and then whatever remains, I'm going to go to my property tax. But they actually have to have certain percentages set up, and because I don't know what those percentages are, because it's Clark County math, it works a little bit different than his math and my math. So I just like to go there, visit the assessor's representative and say, hey, how should I do this? This is what I want to do. And you can go to like the satellite offices and get it done. So I like to take it when I get the card. I like to take it over there within, a month and a half, because normally they send it really early and just get it done. See,
So
that's what
I get
happens.
the postcard, I put it on my thing in my home office, and then it gets buried with bills and kids and all the craziness. So I actually go down.
And he's like, my property taxes went up. Nope. You forgot to apply for your exemption.
Exactly. All right, so getting back on track here, guys. We're almost done. So those are the different items through title and escrow, the different prepaid items, the initial escrow, starting your escrow account and all that. Does that make sense to how that's going to be paid out when those things are due? So all that stuff adds up and then brings you all these numbers down here. So there's also, down here you see your closing costs, gives your total closing costs. And then down here at the bottom, if there's any credits coming back to you, which Andrew did a great job negotiating this one for you, he hooked you up. So the seller is actually giving you a credit. So the seller's going to pay for some of these different closing costs, right? So they're going to actually cover a portion of that. So once we get the file actually submitted to underwriting, we get the file moved a little bit farther along, this is all going to be the same, but you're also going to see your earnest deposit once we've actually validated that that came from your account, it was your money, that kind of stuff. It's going to be taken out, and this amount's going to be less that, okay? So all that together brings you to, like I said, that dollar amount coming into close, and then once we get the file in, we'll get everything updated and get you out some updated disclosures.
All right.
Cool? All right. All right, guys, so closing costs. What are closing costs? How much should they be? Is my lender really charging me that much? That's probably one of the most common questions that we get as loan officers, and I'm sure a lot of real estate agents out there, and then home buyers. I mean, you're really probably wondering what these closing costs are. And a lot of times, home buyers think that that's what we're charging as loan officers. That's how much money we're making on the transactions. Man, that would be amazing, but that's just simply not the case. The closing costs generally range between 2 to 4% of your sales price in a transaction. So 2 to 4% depending on what state you're in, because some states are what we call attorney states, meaning not only is the normal loan officer and the realtor and title and everybody's still involved, but then you have another layer of an attorney. So you guessed it, when you have an attorney involved, it is a little bit more expensive. So what we like to do is just kind of estimate somewhere around the middle, so 2 to 3%, really 3% being the average amount of closing costs when you break everything down. Now, when you think about that 3%, oh man, that seems like a lot. It does, but when you break it down and understand what that actually is, 2 to 3% of that is actually going into what's called an impound account. And your impound account is going in to pay for things that are associated with your property, being your property taxes, which are due here in Clark County. They're due every quarter, so every 3 months, your lender's going to be paying for that. Your home hazard insurance, which is paid a year in advance. And then any other fees that might be associated with that property is actually, again, being put into that escrow account. So only about 1% or less is actually being charged by your lender in most cases. Again, every situation is different, but that hopefully makes a little bit more sense to you regarding the closing costs, what they are. And if you ever have any questions at all about that, I would just always recommend picking up the phone, talking to your loan officer, making sure all of your questions are answered. That's pretty much the loan estimate. This backside is going to get into a few different things with regarding what your loan would cost you over the life of the loan if you guys were to keep it for the entire life of the loan, 30-year fix, never pay it off sooner, that kind of stuff. Like Andrew said, we got some tricks and things to do to pay the home off sooner, but if you did keep it for the life of the loan, these are the different fees and things that you pay, the interest over that term. So, okay?
It's a big number. So the best practice is, even if it's as little as like $100 a month going on to the principal, make it.
Yeah.
Because over the life of a loan, as long as you're applying it to the principal, it makes a huge difference. And Bill, correct me if I'm mistaken, I believe you taught me that most of the interest in a mortgage is in like the first 3 to 7 years or 3 to 5 years. So the faster you can start nailing down that principal, the faster you're going to start reducing that interest amount.
Yeah.
And if you take and add that to the property tax exemption that Clark County will afford you as a veteran, these are smart moves, my friend.
Yep.
Let's see you through with the smart moves.
You definitely end up taking years off your loan.
And
yeah, for
if
sure.
you look at an amortization schedule, which, you know, I know it's like you were telling me on the way in, you're like, can we close already? No, not yet. But when we do, close and we do get a full-blown amortization schedule, you can see just how quickly you can save tens of thousands, and in some cases, depending on how rapidly you're paying it off, hundreds of thousands of dollars over the life of a 30-year fixed rate mortgage on the amortization schedule. So we want to see you and the families that we represent have the opportunity to enjoy your financial stability and economic health. So I don't mean to get like college professor on you, but this stuff is real, and if you do this right, it advances you and your family. And I just am really passionate about, you know, you guys are awesome, and I really want to see you excel.
All right, guys, so the next step is to obviously talk about the interest rate, because obviously you see different things online. You know, your friends are saying this, you're seeing this all over the internet, and you really don't know where the rates are at, especially with VA, because there's a big range. There's a big difference in rates out there. So what we're going to do right now is we're going to actually pull the rates up, see where the rates are at today. I always recommend, once you're in contract, to lock within a few days.
Okay.
Because you want to be okay with where it's at. Unless I get what's called an alert to float, meaning it's imminent, the rates are probably going to improve, the pricing for those interest rates is going to get better over the next week or so. but typically you want to lock right away. So when we go over this today, if it makes sense to you guys, I'd like to lock you today, so that way you guys are locked in, nothing's going to change, you know exactly where your payment's at and everything. So I'll pull it up here and take a look.
That brings up a great question. Do you have plans to pay off your mortgage quicker? If so, do you have any tips you would like to share with us? And if that's the case, please go ahead and drop us a line in the comments below. And by the way, if you're getting value out of this, could you do us a really big favor, please, and smash that thumbs up and hit that subscribe now? All right, thank you so much. Let's dive back into it.
All right, guys, so let's look at the rates. So the rates today are actually really good, so I would recommend probably locking today, and I'll kind of show you what I recommend and then show you the different options. So a lot of times you hear a lot of online stuff where people are like, oh man, I'm gonna give you this rate. It's in the twos. I heard that this company's doing this. What you don't understand a lot of times is these are advertisements. You don't see the fine print. All right, they might be charging a couple of points to get that rate, and a point is actually money. So when you hear somebody say, oh, you're paying points, that's money that you're spending to get the rate. Sometimes it makes sense, but just understand when you see different things, a lot of times it's not really what it appears to be. So as you can see here on the rate sheet, right, you can see the different rates from the absolute best rate you can get to the highest rate. Right, you see the differences in the numbers there. So when you are talking about paying points of 1%, you're paying 1% doesn't mean your rate's improving 1%. It'd be amazing if it was, but typically 1% might get you a quarter, maybe a half a point.
And it's 1% of what?
1% of the loan amount.
Okay.
So it's based, yeah, thank you, Andrew. It's based on the loan amount. So as you can see here, today's interest rates, if you want to pay a point, we can get you all the way down to like 3.125 on a 30-year fixed VA loan, which is phenomenal. But you see that the payment difference from that cost, and it's 1% of the loan amount. So in your case, it'd be several $1,000s. At 3.375, it's only going to cost you a quarter point. So a couple $100 it's going to cost you to get a payment difference of not much, right? It's going to benefit you to go with what we call pretty much a par rate. It's not going to cost you much money to get it. But it's going to be the rate that still gives you a good payment, and it's not really increasing your closing costs. So if it was me, that's probably what I would do, is go with the one that's only going to cost you about a quarter. Now you see how when you go a little bit farther down the rate sheet, the numbers kind of increase? That's called getting a lender credit. Like, you hear people, oh, my lender's giving me a credit, I'm getting a lender credit towards closing costs. Nothing is free, right? It's always coming from somewhere, and you guys can get a lender credit. I have a lot of veterans who come in, they literally have no money. Veterans that they don't have the finances. Maybe they're just getting started, maybe they weren't as smart as their finances like you guys have been, and they need the money. They need a lender credit. We can jack their rate and take the rate all the way to the bottom of the rate sheet and cover all of their closing costs. But because your guys' finances are on point, you don't really need to do that, right? So what I would recommend, if I was in your position and I was looking at this, I'd go with that close to par rate, 3.375. Don't pay a bunch of points, but you definitely don't need the lender credit. It's up to you guys, but that's what I would do. What I meant by that, so say the rate today was 3.375, costing you a quarter, maybe 3.75, which would be about $100 difference a month in payment, is going to give you back about $7,000 towards closing costs. So it's not a huge difference, but it is increasing the rate a little bit.
But over a 30-year lifespan.
That's
few $1,000s today cost you several thousand, tens of thousands of dollars after 30 years.
Oh, right.
Yeah, exactly. And that's the thing, man, because I don't think, we don't have a crystal ball. We don't know where rates are going to be 5, 7, 10, 15 years from now.
Yeah.
Do I think they're going to be in the twos? I doubt it, which is why if you're comfortable with that, that's what I would go with. I'd go with the lower rate, not increasing it to get some closing costs, and just call it good there.
But you guys have made smart moves. You guys are financially and economically viable and strong. If it's like between a situation between a veteran or active duty taking an increased rate to become a homeowner, long term, honest to God, Bill and I both see this play out in practice, and you're about to see it as a homeowner too. Far better to get into home ownership sooner than later, because to his point, what if the rates do go down 1 or 2 years and it's below your present rate? You can do a refinance in that case and lower the rate too. So there's multiple options, but by virtue of getting into home ownership, you're no longer spending like $2,000 a month on rent, and over a period of 4 years, almost $100,000 you never see again. Right. Some people, renting makes sense, but in a lot of cases, if you're going to be in a place for at least 5+ years, buying actually makes more because you're going to be able to recoup that money you put in. So you guys are in a good position, but I did want to kind of touch on that because it is a good position to get into home ownership when people need it. But you guys, since you don't,
and I guess that kind of comes
save
down
the money.
Right, no, definitely.
That kind of comes down to like, what is y'all's ultimate plan with the house? Do you guys see yourself being there long term, or is it just kind of starter where you're going to sell it in a couple years? You don't want to do this again.
11 years from today. Mark the date.
Meaning keeping it forever.
Okay.
We're not necessarily living it forever. Like
Okay.
when they're in college or whatever. Hey, maybe we get a 2-bedroom in Summerlin or something, and
Okay.
we rent this one out or something.
Okay.
Yeah.
But that's like not anywhere in the short term at all. I plan on keeping that house under our ownership for.
Okay, so I mean,
Beautiful house.
based on that, man, because a lot of people do move or sell within 5 to 7 years. But based on what you're telling me there, I mean, let's look at it again. I mean, let's see if it makes sense. Because if you want to buy your rate down a little bit, you want to maybe get down to 2.875. It's going to cost you a few $1,000s, but over the life of the loan, based on what you said, I think that probably is the best bet. You know, it's going to cost you a couple grand. It's going to be a little bit more in closing costs. That number's going to go up a little bit based on what we talked about. But it makes more sense long term for your family's vision. So that's probably what I would do. So it's up to you though. Do you guys need to talk about it, or do you guys want to lock it
We'll
today?
probably have to talk about to see how much we're gonna buy it down.
Okay.
We definitely are gonna buy a point or buy it down to a certain amount, but
Okay.
I think it's just like to where
Okay.
we feel comfortable with how much
Okay,
we
cool.
have.
So, want to call it lifeline.
Yeah.
The options are, or call it lifeline.
so yeah, I mean, that's important. You guys talk about it, see what you guys are comfortable with doing. It doesn't make a difference to me at all.
Yeah.
But just that's what I recommend, going with the lower rate because your long-term family vision. So just call me or shoot me a text tonight and say, hey, lock us in at this, and then we can get it done. So cool.
So the whole goal that Bill and I have, and one of the reasons he and I have helped well over 100 families over the past 6.5 years, is to help you make sense of the real estate and lending process together. And it is extremely important to us to make sure that you're comfortable and confident every step of the way. So, just know that if something does come up later, and there's so much information that happened just now, if something does come up, you want to hit me up, hit Bill up or whatever. If it's a Bill type question, I'll just say, hey, you know what, we need to get Bill because I don't know. We need to talk to Bill because that's his wheelhouse. And then if it's real estate, then I got you. Okay. But the goal here is to make sure that you and your family are comfortable and confident the whole way. And we give you a smooth, comfortable journey to the path called your new home.
Nice.
Nice.
Very good.
Cool. All right. Good stuff, guys. Just let me know tonight what you want to do, okay?
All right.
Cool.
Cool.
Sure. We're gonna leave her with you.
Was
I don't think real estate is her.
where was Ari Safari?
Is she 6? Is she?
She's 6.
She's 6, right? Yeah, that's my 6-year-old. He's probably sleeping right now too.
Sometimes talking about loans are fun.
Ariana, ready? I know.
Thank you again.
All right.
Thank you again.
Great seeing you guys again. Bye, girls.
Ladies.
She's sleeping. Boom.
She said bye.
Have a good night, guys. We'll talk to you tomorrow.
All right.
Sorry.
Oh no.
We're always dancing over each other, aren't we? So now that we've done the loan estimate, closing cost worksheet, and all that fun stuff, how are you feeling? Feeling really good?
Feeling good, feeling informed, feeling like we're comfortable, ready to close this sucker out.
Well, I'm glad that you guys are sharing your experience and your story with everybody, because here's the thing, that fear of being false evidence appearing real is so actual real. And when it comes down to numbers, people a lot of times say, hey, why does it cost so much for this? Or what is this? What is that? And that's why getting this right and you guys being open and sharing your story, and we get to see your life a little bit, the Girl Scouts, the dancing, all that fun stuff. So it's just so powerful. So I want to say thank you again on that. And lastly, next up, we have your home inspection.
Let's take care of it.
Let's take care of it. So you know what? It's great to see you guys. Miss Alana.
Bye.
Mr.
Andrew,
Adrian,
always a
always
pleasure.
much
Thank you.
love. Miss Nicole.
Bye.
Thank you. Miss Ari, thank you for hanging in there with us. I'm glad you were able to catch a nap during the loan process. It's always super amazing seeing wonderful people come together. It's always my thought that good people attract good people. And when you see wonderful families like the Hernandez family and they're chatting with Bill, you can really see how they're working together to make things happen. The numbers that go into your mortgage process don't have to be scary when you have the right team assisting you. Next up, though, we have the home inspection. So here's fingers crossed that everything goes well.
Coming up next time.
So in a moment, I'm going to introduce you guys to Jeff and Tori Waldo of Inspector Waldo Home Services.
I'm a little nervous. I've never done a home inspection.
So you don't want to find any handyman special.
Definitely. I think you kind of come in with you just have those, I guess, that inner fear.
Oh, this is leaking. It's an active leak.
Jeff and Tori Waldo are here to give the house an inspection. Top to bottom, inside and out. Will the report throw up any surprises? Or will it be smooth sailing for the Hernandez family?
Show you everything that we feel is important to you as a home buyer. Okay?
Fantastic.